Hi, this is Mawuena, your chartered accountant, your host for Smart Money, your SME financial literacy podcast. In the first episode, we discussed why many SMEs fail. In the second episode, we explained bookkeeping, what bookkeeping really is without accounting jargon. In today's episode, we are going to look at the financial records every SME must keep. Because no matter how good your product is, no matter how busy your shop is, if your records are poor, your business is at risk. Let's get into it. Now, let's look at why financial records matter. Let's start with a simple truth. You cannot manage what you do not record. Financial records are not just a paperwork. They are the story of your business. They are told in numbers. Your records will help you know whether you are making profits or you are making a loss. They will help you control your expenses. They will help you manage your cash flow, prepare for taxes, and prove your performance to banks and investors. Without proper records, your decisions are based on feelings and assumptions, but not facts. And feelings do not run businesses, but facts do. Now let's look at the common record keeping problem most SME owners face. Let's talk about it. 1. Some SME owners may say, I know what comes in and I know what goes out. But here is the problem. Knowing what comes in is not the same as recording it. Human memory is unreliable, especially when transactions happen every day, when you are dealing with cash, bank transfers, mobile money. Business and personal spendings are missed. You may think you remember everything until one day you wake up and you realize you don't. That is why the records keeping are not optional. They are essential. So, some common financial records every SME must keep. Now let's break it down into practicality. No matter how small your business is, there is a core financial records you must keep every day. The first one is your sales records. This is the records of all the monies that comes into your business. Your sales record should show us the date of the sale, the money that you received, the method of payment, whether it was paid by cash or through the bank or through mobile money. It should show us the customer details. That's the name of the customer or maybe the location of the customer. Why this is important? Sales records help you measure your business performance. It will help you to identify busy and slow periods. It will help you to track unpaid invoices. If your sales are not recorded properly, income can easily be overstated, understated, or forgotten. And that affects everything. Let's look at the second record that you should keep. That's your expense records. Expenses are all the costs that incur in running of your business. And this may include the rent that you pay, your utilities, it being water, electricity, your transport. It could be the fuel that you put in the vehicle to run the business, the salaries or wages you pay your employees, or the payment that you make to your suppliers for the material that you use. Each of these expenses should be supported with a receipt. It should be supported with an invoice or the payment method that was used. Let me emphasize something. Small expenses do matter. Those little payments, transport, printing, small supplies, airtimes, they all add up. Ignoring them will lead to inaccurate profit figures when you think you have profit but yet you are making a loss. And if your profit figure is wrong, your decision will be wrong. Let's look at the third records that you must keep. Your cash records. Cash is the easiest money that you can lose track of. If your business handles cash, you must record your daily cash receipt, the daily cash paid out, your cash balance at each day. Poor cash records is one of the biggest causes of financial leakages in SMEs. Money disappears and no one can explain. That is dangerous for your business. Let's look at the fifth record that you must keep. Bank and mobile money records. If your business uses bank accounts, if your business uses a mobile money account, you must keep your bank statement. Yes, you must always request for your bank statement. You must keep your mobile money transaction summaries. This may sound new to some, but you can actually request for your mobile money statement. These records help you to reconcile your balances. It will help you to detect if there are errors in your balances. It will help you to also identify if there's possible fraud. Somebody might be eating into your money, but you may not even be aware of it because you are not keeping proper records of it. It will also help you to track your customers' payment. Never assume that the bank is always correct, because the bank is always not correct. Always check and reconcile your records. Now, the sixth records that you must keep: receipts and supporting documents. Receipts are evidence. They will support your expense claim. They will support your tax filing. They will support audits and reviews. Without receipts, you may not be able to prove that that expense really took place. Imagine paying for something, but you can't prove it. That creates problems, especially doing tax reviews and loan applications. Keep your documents safe and organized. Now let's look at this one. How long should you keep your financial records? Many SME owners may ask, how long should I keep my financial records? The simple answer is at least 5 to 7 years, depending on the regulations. Why? Because records protect you in case of tax reviews, in case of disputes, in case of business valuation or loan application. Think of business records as insurance for your business. You may not need them today, but you may need them tomorrow. Now, let's start simple, but be consistent. There is a good news. You do not need a complex system to start. You can use a simple notebook to record your transactions, or a simple Excel sheet, or a simple accounting software. What matters is you are keeping your records. What matters most is recording transactions regularly, keeping documents safely, reviewing your records periodically. Consistency is more than just perfection. You don't need to be perfect. You just need to be consistent. So today we are closing with this. If it is not recorded, it cannot be verified. It cannot be controlled, and it cannot be proved. Good financial records give your business clarity, credibility, and control. And those three things are critical for long-term survival. In our next episode, we will be discussing cash flow versus profits, the silent business killer. You definitely don't want to miss this. If you found this episode helpful, share it with another business owner. Follow or subscribe to this channel and start organizing your financial records today. And if you're a financial institution, a fintech company, or a business advisory firm and would love to partner with us, we are ready to collaborate with you. You can reach us through the contact details in the description below. This is Mawuena. Thank you for listening. Remember, understand your money, control your business, build lasting success. See you in the next episode.